Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Friday, 5th September. Coming up on the show, all eyes will be on the crucial jobs report out later this morning. Markets are expecting the data to give the green light to a Fed rate cut later this month. Broadcom and OpenAI are teaming up. Should Nvidia be worried? And the tech bros paid homage to the president yesterday. What did we learn from the meeting in Washington? So grab your coffee and let's own the morning. Well, for the first thing you need to know, we're going to focus on the labour market. After a round of weaker than expected job market figures this week, the August jobs report out today at 8:30 a.m. Eastern. The report is expected to confirm these trends seen elsewhere in the US economy. Economists are expecting the US economy to have added 75,000 jobs in August, slight uptick from July's number. Meanwhile, the unemployment rate is expected to have risen to 4.3% from 4.2%. And now turning to wages, and economists are also expecting hourly earnings to have increased 0.3% over the prior month in August. Okay, the next thing you need to know about is all about energy, and we're talking about the wind and the clash between Trump administration and the Danish firm Ørsted. It received approval from shareholders for its emergency $9.4 billion rights issue shortly after it issued a fresh profit warning. Ørsted's pitch to raise the capital comes amid turmoil caused by President Trump's sustained attacks on offshore wind projects. In fact, the White House ordered the company to halt work on a nearly complete wind farm just last month. Shares of the company, which have fallen nearly 90% from a 2021 peak, are up over 2% currently as we speak. And the last thing you need to know about, we head to the world of tech. And US President Donald Trump yesterday hosted a high-profile dinner with more than 24 tech executives in the White House Rose Garden, where industry leaders lauded his administration's stance on AI and business. The rare get-together included the likes of Meta's Mark Zuckerberg, Apple's Tim Cook, and Microsoft founder Bill Gates, but no Elon Musk. In fact, this morning the FT is reporting that the Tesla board will award him $1 trillion if the EV maker hits some formidable targets. Well, just take a listen to the exchange now between the Meta boss and the president.
I thought you'd say a few words, so we could take a couple of questions later, maybe. Mark, would you like to say a few words about the company?
Sure. Well, I mean, it's. Sorry, should I turn this on?
Yeah.
All right. Well, thanks for hosting us. I mean, this is quite a group to get together, and I think all of the companies here are making huge investments in the country in order to build out data centers and infrastructure to power the next wave of innovation. So it's we don't often get together as the CEOs of the different companies, but it's good to see everyone.
How much are you spending, would you say, over the next few years?
Oh, gosh. I think it's probably going to be something like, at least $600 billion through 28 in the U.S. Yeah.
It's a lot.
No, it's significant.
Today we're wrapping up a big week in artificial intelligence earnings reports with some big news. Broadcom and OpenAI are teaming up to build AI chips. That's according to the Financial Times. And this is the latest sign that there's a growing divide between winners and losers in artificial intelligence. Let me explain. Broadcom stock is a standout winner. Look at this. More than 9% up in the pre-market after the company reported record revenue last night. Reminder here of how big this is. Broadcom's valuation is about $1.45 trillion. So we're talking about roughly $130 billion being traded overnight. Broadcom also got investors excited by delivering record revenue, approximately $16 billion for Q3, with AI revenue surging and an even stronger outlook on top of that. The news of Broadcom OpenAI partnership is driving speculation this morning that Broadcom will aim to take on Nvidia. And look at this chart. Broadcom is up 450% since 2023, more than 700% in the past 5 years. But this isn't just about one specific company that's doing well. It's a clear divide that's emerging in the artificial intelligence space, as everyone from tech giants, governments, and multinational corporations is investing in data centers and other AI infrastructure. The companies that are well positioned to build all of that hardware are seeing record inflows right now. And that's unlike many other services, software or app companies that for now are mostly burning cash. Ivana Delevska, founder of Spear Investment, explained this to my colleague Josh Lipton last night.
There was a first hardware wave that was happening about 2 years ago, and now we're ahead of another investment wave for hardware and infrastructure. So this is why everybody is excited about the hardware layer and the infrastructure layer more so than the application layer. The application layer will take much longer to develop, but once
we mean years, Ivana?
Yes,
what are we looking at?
Absolutely. Yeah. So I think it's going to be years. And even companies that are already large scale, like Salesforce, they're launching AI tools, but even for them, it's taking a very long time to scale. So watch the application layer, but in terms of investments, the risk reward is really more on the infrastructure side.
And investors are now watching hardware companies very closely. Just this month, HPE was up more than 15%, and even smaller players like SanDisk have gained momentum thanks to growing AI-related demand. On the other hand, investors have been ruthless when it comes to services and software stocks. Just look at Salesforce and Figma. While their numbers were okay, their shares tanked as they didn't meet sky-high growth expectations. Basically, it's a show me the money moment for AI investors. And while the hype may not be over, we are definitely seeing a big shift in their attention. Bottom line, we're likely to see more people turning to stocks like Broadcom, which has already turbocharged investment products such as the iShares Semiconductors ETF, but isn't yet as ubiquitous as Nvidia. Take a listen to what Kevin Cassidy from Rosenblatt Security told Josh Lipton last night here on Yahoo Finance.
Broadcom has probably 75% market share in Wi-Fi chips, so that would be included in China. But maybe when it comes to these ASIC chips, the AI co-processors, ByteDance is one of their customers as far as we know. And they also announced that they've got 4 others in the works, and they could be Chinese also. So we're expect to hear a little more about that on the earnings call again of who their next 4 ASIC customers may be.
You know, Kevin, I'll get you out of this. I had a buddy of mine text me recently. He was putting together, he said, this AI theme portfolio, right? And it had a lot of names. I don't think it would surprise you, Kevin. It didn't, though, have Broadcom. And I'm just wondering, would you argue that's kind of a mistake? That if you're an investor, a long-term investor, if you're betting on that AI megatrend, is Broadcom a must-own?
I think it is. The network is going to be the processor, or we've even heard NVIDIA talk about it, and that's kind of the new battleground. Is NVIDIA bought Mellanox to get the networking capabilities. So NVIDIA now has their own networking solutions, but Broadcom has been the leader in the Ethernet market for years. And now what you're trying to do is connect all these different GPUs together to act as one big GPU, and that's where you need the network.
We're going to dive into trading scenarios depending on the jobs report at 8:30 a.m. Eastern with Jordan Rochester from Mizuho, but now time for a quick break. Welcome back to Market Sunrise. Well, let's focus on our top story once again, the upcoming jobs report that's out at 8:30 a.m. Eastern. Will help us dive a little deeper into what to expect and the ramifications the data could have. I'm joined by Jordan Rochester, Head of Fixed Income Currencies and Commodities at Mizuho. Jordan, thanks so much for joining us. So let's start with the jobs number. We're expecting a figure of around 75,000 jobs added in August. Where do you stand on that?
I think the risks are that we could get a better than expected number. But that is because the market has positioned itself for a worse number. This week, we had a weak JOLTS, that's a job opening report. We had a weak ADP, that's a private effort to try and give us an idea of employment growth. So both came on the weak side. The market is expecting a weaker number than that sort of 75K that's kind of thrown out there by economists. So therefore, I think the risk reward actually is that the number comes in slightly better than that. But you need something like a bombshell to upset the idea of a September rate cut from the Fed.
I was going to ask you about that. So 99% chance the markets are saying that we're going to get a rate cut this month. But what about going forward? What are you hoping for? What are you expecting?
Well, look, next week, let's imagine NFP comes in really strong, actually. I think this is the scenario that we need to fear because this is the scenario the market's not positioned for. Say we get 100K, let's even imagine a pretty strong 125. That makes it less clear that they go in September, and it all boils down to CPI next week. We've got the inflation figures coming out, and we are starting to expect to see signs of tariffs feeding through to core goods inflation. It's already fed through to, in terms of the strength of the US economy, has already fed through to core services. In fact, the past 3 months, services inflation has heated up in the US. And this is why there is a debate in the Fed still about whether they need to cut or not, despite so much being priced for that meeting. So next week, if CPI came in strong, if NFP comes in strong today, it's got to be pretty tight for whether they go in September or not.
Now, Jordan is a bit of a currency expert. Where should people be looking at when they're looking at the dollar right now? I mean, it's not had a great sort of recent couple of months. So are we expecting more weakness after this number if it comes in as we expect?
Well, if it comes in weaker than expected or in line, yes, I think the dollar weakness will continue. We're long the euro in terms of the views. We're long the euro, long the yen versus the dollar. But the risk is, though, that the US reaccelerates, especially on that inflation figure. And the market is short the dollar. So it's one of those consensus trades that's a little bit long in the tooth. And now it's all about each data point. And so you get these pretty wild reactions. But overall, the dollar's been quite range bound if I look at the past 2 weeks. So it's been quite frustrating. You saw a bit of strength on Tuesday when the rates market was selling off in a big way. And we've kind of come back. So to be honest, I think that we're going to have pretty range-bound price action in the dollar to slightly weaker over the next week. I don't think inflation will throw us a bombshell. I don't think NFP will throw us a bombshell either.
And just very quickly on the bond market, it's been a pretty jittery week. I think that's fair to say. What do you think the reaction will be on treasuries and across the globe?
Well, I think if the way it works is we had a very large sell-off on Tuesday. We had 30-year rates, it's been in the UK and others, hitting new highs. And you had everyone writing about how it was the end of fixed income. And then we've rallied all the way back, and even more so in some parts of the curve. So rates are on the front foot at the moment, and they need this NFP to behave. What I think, though, longer term, is that the US is going to outperform in terms of its growth, and therefore the fixed income rally won't go too far. Apart from one thing, Donald Trump and his choice of the Fed chair makes it very hard for fixed income next year to sell off, because we are expecting a new Fed chair to install a more intense set of views for rate cuts.
Jordan Rochester from Mizuho, great to have you on Market Sunrise. Thanks for all that. Okay, it's time now for a break, but we'll be back shortly with today's trending tickers. Time to look at some trending stocks that are capturing investor attention. First up, a meme stock that keeps trending up this summer, OpenDoor. Shares continue charging higher, now trading at plus 16% from yesterday's close of $5.13. That marks a fresh intraday 52-week high of $6.07, supported by a substantial surge in trading volume, nearly double the 3-month average. And again, you guessed it, that's driven by retail investors. It's a classic meme stock momentum trade. Retail investors rallying around bullish commentary from hedge fund manager Eric Jackson, along with renewed social media buzz. We're now at plus 3.5% roughly in the past, plus 850% in the past 3 months. That's absolutely mind-blowing, isn't it? Still, despite the excitement, cautious investors will note that the stock's rally is heavily sentiment-driven, not tied to any new operational catalyst. Ticker number 2 today is DocuSign. Shares shot up around 9% in pre-market action after yesterday's earning release. What sparked the move? DocuSign beat expectations handsomely, posting 92 cents earnings per share on $800.6 million in revenue, outperforming forecasts of 84 cents and $780 million respectively. Management described Q2 as one of the company's highest performing quarters in recent memory, fueled by AI-driven innovation and strong momentum across its flagship e-signature platform and other products. DocuSign also lifted its outlook, now guiding to $3.19 to $3.2 billion in full-year revenue. A reminder that DocuSign investors were hungry for some good news after the stock's wild ups and downs this year. So after a tough year with shares still down roughly 15% year to date, we'll be watching to see if today's performance marks the beginning of a real comeback for DocuSign. Now, our last trending ticker is Lululemon. Just look at where it's trading in the pre-market, down around 19%. Last night, it released results and it wasn't pretty. The athletic wear maker slashed annual profit and sales forecast, hurt by tepid US demand and tariff costs. The firm cut its annual profit forecast for the second straight quarter as it grapples with pressure from losing market share to rivals, a volatile macroeconomic backdrop, and tariffs that are hurting consumer discretionary spending. The firm's CEO, Calvin McDonald, admitted that Lululemon had let its product cycles run too long within many of its core categories. But America was the weak spot. Comparable sales there fell 1%, while international sales actually rose 15%. But one analyst told my colleague Josh Lipton that he's still feeling upbeat when it comes to Lululemon stock.
Pretty bad quarter for the company, but I think, shares have mostly priced this in. Obviously, investors think not, but, shares have been trading poorly for 6 months now. And really valuation, even on their updated guidance, is really muted. I mean, they trade now currently at about 15 times the updated guidance, which is pretty much well below peers and well below its historic averages. So I think investors had this in the back of their mind that shares have been trading down, for the past 6 months. And it looks like, it's going to be about a 10 to 15% hit to gross margins, the tariffs. So, pretty bad quarter overall. But there is some bright spots, international still growing well. I think that's a way they can start to insulate themselves from these tariffs. And we think that they can continue to grow internationally. They've got a long runway there.
Zach, you look at this stock, Zach, to your point, this stock had already been hammered. Heading into the print, it was down about 50% this year. Now we're down another 12, 13% here in the after hours. How do you reverse this, Zach? As a believer in the stock, what's the way to pull out of this for Lululemon?
Yeah, so they've got to continue to focus on international. That's huge for them, but they're really losing market share in the U.S. and you've seen that this quarter. The comparable sales were down, low single digits, which is pretty unheard of for the company, and they're not growing in North America at all. So, you're really got to really focus on your product and innovation here to kind of meet the competition, and then they've got to really continue to execute internationally because as they grow internationally, revenues will, become a larger percentage of total revenues and it'll insulate them from the tariff rates. So that's what we think they need to do. We still like the company because valuation here is, pretty incredibly cheap, especially in terms of historical averages for the company.
Before we go, as you know, this year the world has been holding its breath watching tariff negotiations. But what if it turns out that Trump does not have the authority to implement those emergency tariffs in the US? The answer now hinges on the Supreme Court. And according to some legal experts, even if Trump has called for the Supreme Court to save his emergency tariffs, it is totally possible that SCOTUS will have a different take. Henrietta Trays, Vida Partners' managing partner, explains why she thinks the odds are actually in favour of the Supreme Court siding with lower courts over tariffs imposed by President Trump.
Trump doesn't have the authority. No president has the authority under the 1977 International Economic Power Emergency Act. So there is a plain precedent for the administration never using these tariffs, Congress not having given the president taxation authority here, and especially not on the sweeping scale that he has imposed over what has been, decades-long issues for the United States in terms of trade deficits. So the cut and dry answer is that the Supreme Court is likely to find on the legal question that the president doesn't have the authority to impose these tariffs. Moreover, they've also decided in the last couple of months that, and when a president acts too aggressively, it violates the major questions doctrine and says basically the president is asking outside of his purview. He's not in his lane anymore. Congress needs to decide these things. So my base case with 50 to 65% odds is that the Supreme Court will side with the two lower courts and say the president doesn't have this authority. You can see from the president's filings with the Solicitor General, that they're trying to say, look, don't even limit it. Don't make it a short-term tariff. Don't make it applicable in only certain instances. We want this wide latitude. And that goes to the heart of the major questions doctrine. So my base case is that sectors are going to get really aggressively hit in the next couple of months as the IEEPA authority is overruled. And that's where we need to concentrate. Furniture, lumber, timber, aircraft, trucking, pharma, semis, that's what's going to get hit in the immediate aftermath of this court case.
And I'm glad you brought that up, because that leads to my follow-up here. The next question is, what happens if the Supreme Court decides not to hear this and the lower courts their rulings are upheld here, their decisions are upheld? What are these businesses to do? What can they expect? How long is it going to take for the Treasury to return some of this money?
Yeah, man, it would be wild if the Supreme Court just rejected the president out of hand. The base case expectation is that Justice Roberts will not do that, and they will take up this case, and we'll get a conclusion, as Ben suggests, by November, December of this year, as opposed to February or March of next year. So they are moving quickly. It's a $4 trillion question. So this is obviously very critical. The plaintiffs in the case, which are domestic importers, companies selling learning materials to students and children, for example, all these domestic U.S. companies who import products from abroad. Just like John Deere would in terms of steel and aluminum, importing it from abroad. You see the impact that it's having on John Deere and Caterpillar and those companies right now who are forced to pay these massive tariffs. They want their money back. If these are illegal tariffs, they want their money back. And by the way, they want interest. So this is roughly $150 to maybe even $300 billion worth of refunds that the Treasury would be required to dole out. It'll be very complicated and probably won't be sorted out for months to come.
Okay, before we go, let's have a look at where the markets stand. Well, let's start with Asia, where in the main stocks tracked Wall Street higher overnight, clearly hoping that there will be a rate cut from the Fed later this month. Interesting to note the Nikkei there up over 1%. That's after President Trump finally finalised that Japan trade deal with 15% tariffs for Japan. But remember, the Prime Minister there is facing a bit of discontent within his own political party there. Okay, it was a similar picture in Europe as well. Let's turn over there. Stocks rose in early trade while long-dated bond yields actually eased in the region as those expectations for Fed rate cuts helped markets overcome concerns about fiscal deficits in quite a number of countries in the region. And before that, we obviously have that crucial jobs report, and this is how the markets in the US stand. Only the Dow ticking slightly lower there, but mainly in the green there, as you can see. Okay, let's have a quick check on Bitcoin, because it is actually trading a little bit higher today, I noticed. One thing to note in the world of crypto, though, is Tether. It's the world's biggest stablecoin company, and it's held talks about investing in gold mining. It's clearly looking to deploy its vast crypto profits into bullion. And speaking of gold, and let's see where that's trading, still near those record highs, just a smidge down there, as you can see, but still over that 3,600 mark. And, remember earlier we told you about Goldman's talking about a $5,000 mark it could hit. Okay, that's it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Coming up next, join Ali Kanal on Market Open on the Morning Brief. I'm Ramzan Karmali. Go own the morning.